Tax audits and tax investigations are the primary activities being undertaken by the Inland Revenue Board Malaysia (IRBM) in ensuring a high level of compliance under the self-assessment system. As tax audit or investigation is an intensive process which is time-consuming and may require additional resources, it is important that this process is handled with great care to ensure a desirable outcome is achieved.
A tax audit is an examination performed by the IRBM on the taxpayer's business records, and financial affairs to ascertain that the right amount of income is declared and the right amount of tax is calculated and paid in accordance with tax laws and regulations. Generally, there are two types of tax audit being performed by the IRBM, namely the desk audit and a field audit.
A desk audit is held at the IRBM's office. It is normally concerning straightforward issues or tax adjustments that are easily dealt with via correspondence. The taxpayer may be called for an interview at the IRBM office if further information is required. It generally involves checking all information on income and expenses and all claims by the taxpayer in the income tax return.
A field audit takes place at the taxpayer's premises and involves the examination of the taxpayer's business records. Cases for an audit are selected through a computerized system based on risk analysis criteria such as the company's business performance, inconsistency of reporting income, spending habits, and past compliance records, among others. But once a taxpayer is selected for a field audit, he or she is usually given between 2 to 4 weeks' notice to prepare the documents required for the audit.
Tax investigation, on the other hand, is a more severe enforcement measure undertaken by the IRBM. Generally, the objective of a tax investigation is similar to a tax audit, but is carried out should there be a suspicion by the IRBM based on any precise and definite evidence to show that the taxpayer has deliberately avoided taxes or committed an act of willful evasion under the tax laws. A tax investigation usually involves an unexpected visit to the taxpayer's business premises, whereby the tax investigator will take custody of the required documents and books of accounts for investigation purposes.
Willful evasion of tax refers to any action or deed performed with the intention of evading or assisting any other person to evade tax. This includes deliberate omission or understatement of any income from a return, giving a false answer either orally or in writing to a question asked or to a request for information made for the purpose of the act, falsifying books of account or other records, or authorizing the preparation or maintenance of false books of accounts or other records. Lastly, making use of any fraud, art, or contrivance, or authorizing the use of any fraud, art, or contrivance.
In the case of detection of tax offense such as fraud, willful defraud, or negligence, the IRBM is empowered to conduct the following. Additional assessments in which the IRBM will further investigate the taxpayer's expenditure and income. Heavy penalties. The penalty will start at 45% and it can go up to 300% depending on the case imposed on the taxpayer. Fines, which also depend on the case imposed on the taxpayer. And finally, jail terms, primarily for criminal offenses such as the omission or understatement of income, as well as the over-declaration of expenses.
Tax investigator may or may not be a chartered accountant, as they only need to inspect specific documents and records. Whereas, tax auditors are usually chartered accountants who are equipped with the skills and abilities required to examine all documents or records.
Tax investigations are conducted thoroughly to avoid unnecessary errors and inaccurate results. However, in tax audits, work is performed by means of appropriate audit procedures in line with audit objectives and may thus contain a certain amount of risk related to audit.